In 2020, a virus known as the Covid-19 pandemic had disrupted the global economy. Most countries experienced a sharp decline in economic activity. Lockdowns, social distancing regulations, and border closures slowed down production and trade. Travel and tourism industries collapsed almost overnight. Meanwhile, supply chains were thrown into disarray, causing shortages of essential goods in some places and unsold inventories in others. While the entire global economy was affected, one notable exception stood out: Vietnam. Surprisingly, Vietnam's economy not only weathered the storm, but in many ways grew while much of the rest of the world struggled. It's as if Vietnam had seen a miracle during that very year. To understand what we are saying, let's pull up a graph with data that we collected from the World Bank based on the gross domestic product, GDP, annual growth per year of major Southeast Asian economies, and a select major East Asian economies. Here, as you can already see, many economies in East and Southeast Asia saw deep GDP contraction. Japan, for instance, saw a contraction of 4.1%, whereas Singapore at 3.9%, and even major Southeast Asian economies like Malaysia seeing more severe contractions. Yet, out of the list that we have here, one of them has stood out: Vietnam. You can see that in the year 2020, Vietnam's GDP didn't contract. It did the exact opposite. It grew. For 2020, Vietnam's GDP grew by over 2.9%, which made it one of the only few economies globally that saw an economic growth in this year. This isn't a small feat, as it reflects Vietnam's remarkable resilience and strategic economic management during a period of unprecedented global turmoil. So, how did Vietnam become one of the only few economies that grew in 2020? How did it manage when the world was grappling with economic devastation, and what lessons can be learned from its approach? To understand all these, let's look at 4 major reasons that were crucial in helping keep Vietnam's economy afloat. The most important reason behind Vietnam's economic management is more about public health response itself than just economic policies. When the COVID-19 pandemic occurred globally, Vietnam had closed its borders to international travelers relatively early, by late March 2020. This meant that while many countries were still debating whether or not to stop flights, Vietnam had already prevented large-scale transmission from imported cases. On top of that, Vietnam had also rolled out an aggressive public health campaign aimed at controlling the virus domestically. Mass testing, comprehensive contact tracing, and centralized quarantine measures were rapidly implemented. Unlike many countries that relied heavily on self-isolation, Vietnam centralized its quarantine system to ensure infected individuals and close contacts were closely monitored. This strategy drastically reduced the chances of community transmission and allowed the country to reopen parts of its economy much earlier than others. Here's a graph with data that we collected from the World Health Organization on the cumulative confirmed COVID-19 cases per million people. As you can see, Vietnam saw steady growth in the cumulative cases in 2020. With the end of that year in December, Vietnam saw 14.5 cases per million people. While this was a steady growth, it was, in fact, very small, especially when we compare it to other economies that saw a lot of infections for 2020. For instance, one of the economies that saw cases rise fast was the United States. President Donald Trump, who governed the country at that time, was even skeptical of the severity of the virus during the early stages of the pandemic. This delayed the implementation of strict public health measures, contributing to an exponential rise in cases. Hence, as you can see in the graph right here, the cumulative confirmed cases per million people of the United States had risen dramatically to over 56,710 per million people. which is an insane number when we compare it to Vietnam's 14.5 cases per million people. Likewise, the same number is seen in many other Southeast and East Asian economies. They saw their COVID-19 cases increase dramatically. Because of this early containment, Vietnam avoided widespread, prolonged lockdowns in 2020. This basically meant that Vietnam's factories could keep running and businesses could remain open, allowing domestic economic activities to continue relatively unimpeded. Domestic consumption, while affected by reduced tourism, remained stronger than in many other countries where extended lockdowns disrupted everyday life for months on end. Here's a graph on the manufacturing production of Vietnam by month from late 2019 to 2021. Data that we collected from the General Statistics Office of Vietnam. As you can see, while manufacturing production contracted in January and April of 2020, there was strong and consistent growth across the rest of the months of 2020. Likewise, here's another graph on the retail sales, data that we collected from the same source. See, just like manufacturing production, there was contraction seen in some months, but for the rest of the year, consistent retail sales growth had followed. This is the exact opposite of other economies that saw contractions. For instance, here's a graph on Malaysia's retail sales. You can see that in the early months of 2020, Malaysia saw far worse contractions in their retail sales, and contractions had continued throughout until 2021. The only month when retail sales grew in Malaysia was September of 2020. But of course, one good month can't fix an entire year's contraction. The effects of this continued spending and factories open had then allowed Vietnam to keep their businesses alive and people employed. Here's a graph on Vietnam's unemployment rate, data from the General Statistics Office of Vietnam. As you can see, Vietnam's unemployment rate had ticked up to over 2.73% in the second quarter of 2020. But it went much lower throughout the rest of the year. But what's actually amazing about Vietnam's labor market is the fact that even though unemployment was up at 2.73%, it was still so much better than its neighboring countries. Let's take the example of the Philippines here. You can see that the Philippines' unemployment rate, even before COVID-19 pandemic, was so much higher when you compare it to Vietnam. And in February of 2020, the unemployment rate even rose to over 17.6%. A figure that is staggering when compared to Vietnam's relatively low unemployment rate of 2.73%. The second reason for Vietnam's profound economic growth is because they are an export-driven economy. That is one of the distinguishing features of Vietnam's economy, as it is heavily reliant on exports. Over the past decade, Vietnam has become known as a leading exporter of electronics, textiles, footwear, and other consumer goods. During the pandemic, while global demand for certain products, like automotive parts, declined, there was a surge in demand for electronics, home appliances, and personal protective equipment, areas where Vietnam excels. Here's a graph on Vietnam's merchandise exports, data that we collected from the World Bank. As you can see, from 2019 to 2020, Vietnam saw its exports grow from $264 billion to over $282 billion. For comparison, here's the world's total exports from the same period. You can see that the entire world saw a contraction in total exports, which was a key driver of the world's contraction. Vietnam's export growth over this period again highlights another reason for their strong economic growth. But specifically, the biggest growth in goods exported for that year was due to telephones, which are largely because of South Korea's Samsung. Samsung, which operates as one of its largest manufacturing hubs in Vietnam, contributed significantly to the country's export growth during the pandemic. The demand for smartphones, tablets, and other electronics surged globally as remote work, online learning, and digital entertainment became the norm. Telephone exports grew from $18.3 billion in 2019 to over $21.4 billion in 2020. Another key component was integrated circuits, which grew from $15.5 billion in 2019 to $19.6 billion in 2020. These and a lot more others out there helped Vietnam's economy grow. Thirdly, another reason for Vietnam's strong economic growth rate was because of the government's role. Vietnam's government, early on, had introduced a stimulus package worth around $2.6 billion to help the economy in 2020. This included targeted support for those who lost their jobs, small and medium enterprises, SMEs, and tax relief measures for businesses. The government later expanded support packages, introducing lower interest rates and delaying tax payments to ease the financial burden on businesses. These have helped keep the economy stay afloat. Indeed, Vietnam saw contractions in many parts of their economy, especially those reliant on tourism. That is where Vietnam's government stepped up by providing them the relief needed. Moreover, even amidst the pandemic, Vietnam continued to invest in infrastructure projects. Public investment disbursement was accelerated to maintain economic momentum, funding roads, bridges, and other public works. Several reports said that infrastructure spendings in Vietnam had grown substantially, seeing growth spending by over 35% in 2020 to $20 billion, or 6% of their GDP. Finally, the last reason for Vietnam's strong economic growth rate is due to foreign direct investments, FDI. FDI has long been a critical engine of Vietnam's economic development, particularly in manufacturing and export sectors. Throughout the pandemic, FDI remained surprisingly resilient. Here's a graph on the FDI net inflows, data that we collected from the World Bank. As you can see, Vietnam's FDI has remained strong. While it wasn't as big as the one seen in 2019, the figure was still considerable given its impacts to Vietnam's economy. Thus, Vietnam's economic performance during the COVID-19 pandemic was a testament to a combination of factors: a swift and strategic public health response, a well-diversified export sector, robust government support policies, and consistent foreign direct investments. While other nations suffered from repeated lockdowns and significant economic contractions, Vietnam kept its factories open, its exports flowing, and its people relatively safe, at least in the initial phases of the pandemic. Yes, while it is true that Vietnam's economy had stayed afloat during the initial year of 2020 of the COVID-19 pandemic, the country still saw a surge in cases the year following that, and economic challenges that went along with it. But at least for the first year of 2020, the country's economy has been strong. Although, while it is also true that Vietnam saw a surge in COVID-19 cases from 2021 to 2022, it is also true that their economy had also continued to outperform. But anyway, do let us know what you think. Thanks for watching.